Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Tony Zhang, Chief Strategist at OptionsPlay for review in the Nordics markets and option strategies to trade the trends. Tony, welcome back to Trade Talks, and let's go right into it with a review of the four major markets in the Nordics that you track.
Yeah, so I think a lot of investors are currently asking the question, can equity markets continue to sustain this rally that we have seen since March and continue to rally into the end of this year and the beginning of next year? And I think that's if we look at the broader markets, most of the equity markets actually look fairly constructive. But the first chart I actually want to take a look at is really the response that the Nordic countries have had to COVID. Initially there were some concerns about how Sweden was handling the pandemic. But if you look at the data right now, there's been a huge change over the past couple of weeks in terms of the number of fatalities in the Nordic countries versus the rest of the world and the rest of the EU. The Nordics actually are really leading the entire European Union right now in terms of the number of fatalities per 100,000 in population. So this is really, in my opinion, fairly constructive, especially if we look at the Asian countries that have largely contained COVID and the gains that we have seen from those equity markets. So if we look at the broader markets within the Nordics, the first one, let's take a look at Stockholm. The OMX S30. This market, recently has been fairly strong, especially off of the November lows, and recently broke out above the $1,900 level, which is the high that put in February before the pandemic. So the fact that it broke out above pre-pandemic levels is certainly constructive. The major line in the sand here is that 1,900 level. If it can hold that level, it certainly can continue to rally here towards the end of the year. When we look at Copenhagen, this was the index that was actually strongest pretty much since the March lows here. But this is really the part of the market, or the Nordic market, that has actually slowed down a little. It's stalled at that 1,600 level here. It is well above the February highs here from earlier this year. So that this is still at the moment the strongest markets. But right now, Sweden actually catching up to the Danish markets and actually outperforming quite a bit here. We're really looking for a breakout here on the Danish markets above that $1,600 level to sustain a continuation higher here. And then if we look at Helsinki, this is another market that has largely lagged behind the broader markets, but actually is playing a bit of catch up here. We do have a double top here. It's not quite above those February highs at 4,600. It is just at that level here, about to break out here. So that's really one that we're watching for. When we have a breakout here on the Copenhagen and the Helsinki markets, that's really, in my opinion, what could really see the Nordic markets continue to move substantially higher. And then if we look at Oslo, this is out of the four Nordic countries, the weakest of the four. Since the start of the pandemic. And largely it's because the Norwegian markets largely have mostly exposure to oil and gas, which has largely underperformed it. But since oil and gas has really taken a fairly strong recovery here over the past few weeks, as vaccine news have provided some upside here for oil and gas. We've seen the Oslo markets also come back to life here. Now we've broken out above the $800 level, which is constructive. And I think targets here to the upside are about 880 here for the Oslo 20 index. So overall, if you look at the four markets, it looks fairly constructive of a continuation higher here. But you do have the Copenhagen and the Helsinki markets that are just on the verge of another breakout higher.
And Tony, you had mentioned that Copenhagen was the outperformer, or is it exposed to a certain sector that would explain why it has outperformed more than the others?
Yeah, Copenhagen has quite a bit of exposure to both pharmaceuticals and technology. So those are really two sectors that have been largely drivers of growth since the start of the pandemic. So that's part of why Copenhagen has outperformed, but it's started to slow down a little, as we have seen also technology stocks like the Nasdaq 100 fall behind the S&P 500 and the Dow Jones over the past month or so. We see that same kind of shift, if you will, in the Nordic markets as well.
Sweden took a novel approach to fighting COVID-19. How's its economic recovery going?
Yeah, so this is actually where we're starting to still see some positive upsides from the economic data here. First of all, the unemployment rate has started to decline here in Sweden, which has kept accelerating here to the upside, despite the fact that Sweden didn't lock down as some of the other Nordic countries have, but is starting to surprise to the downside, which is good. Unemployment in November was expected at about 9%, came in at 8.6%. That was a positive surprise. And just like the rest of the world here, one of the major sectors of driver of growth here since the pandemic is really housing, as citizens rethink about how they work, shifting from offices to working from home and moving away from urban areas to suburban areas. We're seeing that exact same trend in Sweden. So one of the things that we have seen is a huge acceleration in terms of home prices within Sweden. And this has actually continued to accelerate even further here last month. And this is really a net beneficiary for some of the home builders, which is some of our ideas that we want to show investors here for today.
And let's get into them today. We have two trades, one bullish, one bearish. We'll start with the bullish trade in real estate where you're buying a call spread.
Yeah, exactly. I want to take a look at JM, which is a home builder largely for residential homes. They've been expanding into more suburban areas. They've seen a substantial amount of growth since the start of the pandemic, and recently just broke out above a recent all-time high of 275. So what we're looking for is a continuation higher here for JM. And I'm using a trade structure here that is designed to reduce risk, because when markets are trading near all-time highs, you always have a higher probability of a pullback or a short-term correction. And you want to make sure that when you take these long exposures as stocks break out, that you want to also account for the potential downside and minimize that. So here I'm going out to January. I'm buying a 275 300 call spread, paying about 930 crowns here for, that's costing us about a little over 3-4% of the underlying stock price here to take this bet of a bullish move here for JM. So if JM, does fall back or does correct lower, we're only risking 3 to 4% of the underlying stock price, and it gives us a little about a 1.5 to 1 risk to reward ratio as if JM continues to break out and continue higher.
And our next trade here, you have a bearish one in food staples. You're selling a call spread. So Tony, in addition to the strategy, tell us why you're selling call spreads instead of buying put spreads, which is another bearish strategy. Why would you do that versus the other?
Yeah, exactly. So part of the reason that we're not buying a put spread here is because of the fact that equity markets, as we have shown you across the Nordics, are fairly bullish. So, but the theme here is the fact that as we're seeing fairly strong vaccine news pretty much globally here in the US, in the European Union. We expect that food staple stocks like Axfood will continue to have some downside pressure. Now, I'm not necessarily expecting a substantial move to the downside, which is why I'm not buying put spreads. I'm actually selling call spreads. So even if Axfoods fails to rally as the equity markets rally, this trade can still be profitable, versus if you bought a put spread, you really need Axfood to continue moving lower at a fairly substantial pace to the downside in order for those strategies to be profitable. So we're really taking advantage of the fact that options allow you to profit even if the stock just stays put. And that's why we're selling a call spread here. I'm going out to January. I'm selling the 195 200 call spread when Axfood is currently trading at 193. So as long as Axfood stays below 195, this strategy will be profitable. So that's the shift that we're making here. When we're taking bearish bets in a bullish market, we're not necessarily betting on an acceleration to the downside, simply that they will likely stay put and not move higher.
And Tony, finally, how can Nordic Trade Talks viewers get access to OptionsPlay?
Yeah, so we have a fantastic partnership with Nasdaq for all Nordic investors that give you access to not only the OptionsPlay Nordic tool for free, but also access to a wealth of educational sessions to help you learn how to trade options, learn about call spreads and debit spreads and put spreads. So this is all available to everyone in the Nordics free of charge at optionsplay.se.
All right, Tony, great to see you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.